Hey guys, it's Max Convexity. How's everyone doing this morning? Let's take a look at these option strategy funds and see how the market opened up, and we'll look at some of the buffer reports maybe and see what's happening. I was just happen to be looking at the daily VIX. The volatility, the daily VIX is still a little bit elevated here. I mean, when it gets under the red line, that's the 200 period moving average. That's when it starts to get really compressed, and it's not there yet. Maybe we still have some more volatility ahead. Who knows? All right, well, let's start with the SPX. This is JEPY. Let's switch it to the 30 minutes so we can drill down on these profit boxes and see where we are and what we have to do by the end of the day. All right, you can see the market opened up higher and then it's pulling back, but we're still pretty much in the middle of the profit box. So we would expect on JEPY about half profit, right? Let's see what we have. 621. Hang on, I got to turn my TV down. Okay, it doesn't even look like I did this profit box yet, or this. I guess I have. Okay, so right now it is. I just haven't done this yet. 9 points in the money, so they sold the option for 20. About it's worth 9 about now. All right, so that creates a profit of $210,000. They're going for $375. The good news is it's still at $1.12 positive on the month. Oh, and the dividend estimate's $1.01. So I don't know if that's good news or bad news. It's kind of coming down. I wish it would have stayed up where it was a few days ago. All right, it's $1.01. So now we'll check out Triple QY. These guys sold options. Their options cost $110. They sold. Right now, those options would cost nothing to buy back because they're out of the money. So these guys are up $1.16 on the month, which is awesome. $1.37 is the dividend estimate. Now let's look at the chart of this. Make sure the chart jives. Yeah, so we opened higher. On this profit box, it looks to me like this option was all out of the money. And a few days ago, we had another option that was all out of the money, and I forgot to ask Jay about it last night. It wouldn't have been that interesting anyway. It wasn't in this one. I think it was in IWMY. Anyway, but this option, the reason the profit box is yellow is because it's all out of the money. Green is intrinsic, which means the amount of upside capture they're going for, or the green represents the intrinsic capture or the upside this fund's trying to get. The yellow represents the extrinsic. So because the strike price was not above yesterday's close, which is where they theoretically put this on at, it makes me think it was all out of the money or all extrinsic. So anyway, it is what it is. Extrinsic's fine. That's how they pay the dividend. That's the real goal. People don't buy these or shouldn't buy these for capital appreciation because it's the wrong instrument. It's the wrong financial instrument for capital appreciation. All right, so IWMY. IWMY, these guys right here sold options for $16 today, $16.48 actually. Right now, those options would cost $19 to buy back, unfortunately. They sold the 2180 strike, and the market right now is at 2160.37. So Russell is the weakest today, the weakest link. We'll pull up the chart, and you can see the sell-off made it go just right under the break-even price of the profit box. All right, well, that sucks. That happens sometimes. Can't win them all. USO, these guys had to close these two options yesterday for a loss, and then they rolled to this option right here. It's a 76 strike option. They got $1.71 for it. We have it all programmed into the spreadsheet, and those other options, they were going for 220 and they lost 166 on one of them. They were trying to make 14, but they ended up losing 14 on the other one of them. This one, they're going for 273. So we'll see how they do. They need, it was 171. They sold it. They sold the 76 strike. So, of course, the break even is the strike less the option price they received, 74.29. So if I drew the profit box right, I should have pulled this down to 74.29, and I did not. I was going too fast. I did the math in my head, but anyway. All right, so that is where the price needs to rally to. The price is here now, but it was here yesterday. It's starting to go up, so we'll see what happens. All right, so what else are we going to check here? Let's just check some. Let's check some other stocks. Tesla, that's a boring one. That's going straight sideways. It's good for the Tesla crash people, right? Let's check Coinbase. Going sideways today, but it's good. But it's been up the past couple of days. MicroStrategies. All right. What else should we test? NVIDIA, AMD. Those kind of look the same. Google opened up, pulling back, just like all of them. Amazon opened up, pulling back, going sideways kind of generally. I like to look at the volatility index. Sometimes it gives you clues. And remember, good is bad on the volatility index. So whenever we have it breaking out above the Bollinger Bands and then confirming, that means volatility is trending up, which is a bearish signal for the stock market. So this is something I look at lots of times. So I'm going to overlay the stock market on the pane below it. So let me see here. Let me get this back in a little bit. But like I also said that good is bad, bad is good. So when the volatility index gave a bearish trending signal back here on August 9th, that was a good signal. Okay, we should have some good times ahead because people are selling volatility. That means people are taking hedges off. When volatility goes up, it means professionals are putting hedges on. The idea is professionals know more than we do. So when you see that, sometimes it's a good early warning sign that the market could be getting ready to go the other direction. So right here was would have been a great signal. And sure enough, that the market went from 5,300 to where we are. It's been an absolute face ripper. But now volatility is starting to go the other direction. If we get volatility above the 200-day moving average, which is red, and going up, breaking out of Bollinger Bands and blowing up, that would be a really bad sign. And whenever that happens, usually it does make the market go down, and that's when it's time to get puts. Anyway, we'll keep an eye on this every day. We'll also keep an eye on VIVX. This is the ultimate inside indicator because this is the volatility of volatility. And you can see actually, so these are the true pros. These are the pros of the pros, the 1% of the 1%. Well, these guys aren't as worried because they aren't even close to being over the 200-day moving average. And they aren't really breaking out of their Bollinger Bands and getting momentum yet. So we'll keep an eye on both of these. Now, these guys back here, though, they were also a little late to signal the bull market. These guys are a little more cautious. This one didn't give a bullish trending signal until August 12th. So that's, so maybe the pros were a little bit early, but the pros of pros are on board now. We'll keep watching. we'll keep watching. But these guys, both of them told you well in advance of the last crash that something was going to happen. Something I watch every day, so I figure you guys might be interested too. We'll make it a regular feature here. All right, so let's look at some of the buffer stuff. I worked until I passed out last on the buffer report till like 1 a.m. I got a bunch of comments. Hey, I own this one and it's actually up this much. Anyway, so I went back and I made sure everything was correct. All right. Now, this is just the daily buffer report. This just shows the daily change. Blue is the high yield fund. Red is what the benchmark is doing. You can see as far as the NASDAQ and S&P, they basically aren't moving. The S&P is basically unchanged. So that's interesting. So we can see which ones kind of stand out. iSpy, JPY, SPY-T. Look at those. Those Defiance ones are beating up on the ones that everybody likes so much. Not iSpy, though. But iSpy is another daily one. The revenge of the daily funds. I'm partial on the daily funds. Look, they're beating up on old SVOL that everyone just loves. ZIBB, KQQQ, on any event. Let's see, standouts on the bad side, YMAX. That's nothing for those guys, though. ULTY down a little bit today. IWMI down a little bit. I'm going to put TSMY on this buffer report, or I might make a special buffer report of its own, since it's the first of these funds where Jay has listened to us and uncapped the upside. I've been bitching about uncapping the upside ever since prior to New York. He's been having to hear it from me, and I'm sure other people too. I think other people are just griping about the erosion, but I finally figured out if you're griping about the erosion, that's what you're really griping about. Is the upside's not the upside being capped is what it makes it appear like it's eroding. Okay, so let's see what else we got. I have some better buffer reports here. Okay, here's a buffer report just for KQQQ. So this just shows how it's doing in relation to some of its peers. And this isn't live updating. This is as of yesterday. It was doing better than its peers. There's a better chart of it. That was as of yesterday's close. It was also doing better than the benchmark, but that's not updating. But I stayed up late trying to figure out how to make that live update. Anyway, it's not yet. Oh, and I think I see why. Okay, so now let's look back to that chart. All right, well, it still hasn't caught today's prices in there, but it will. It should. It's reflected on here. Oh, it's because we have to do this. Hang on 1 second. All right, well, now that's great, except now there's some kind of error. All right, I'll have to work on this more later. But in any event, KQQQ is doing great, but that's great. But the other part of it is it pays a really low dividend, so it needs to be doing great. I mean, that's, when you're going to pay that low of a dividend, you better have hella good total return. All right, so but I'm not giving up on it. It's just been out 1 month. We'll see. Hopefully, the dividend will go up. The active management may save it. We'll see if we get into a bear market, if Howard's able to really, really give it some buffer and give it some protection. I mean, ideally, that's what you would want. You want an ETF that has no buffer in a bull market if it's going to go up, or very little, but then when it's going to go down, full buffer. Okay, what else do we have here? We have this one here. Okay, I thought this was kind of interesting. And this is all the daily funds together compared against the short volatility funds. Short volatility funds are SVOL and ZIVB and THTA. The all these funds are kind of generally short volatility, but the SVOL ZIVB are implicitly short volatility, and THTA might as well be. Anyway, I thought it'd be fun to compare the other daily S&P funds. So we have JPY, we have iSpy, and we have XDTE. All right. So this is each day, and this is from the start of August. So you can see here those short volatility funds really got killed. Oh, and this is cumulative return. ZIVB was down 22% at one point, but you could see ZIVB digging itself out of the hole. It was down 22%, but now for the month, it's just down 3.59. And that includes dividends. This is the one I was mainly working on. People wrote me and said XDTE was up more than it was, but they just paid a dividend yesterday. And when I included yesterday's dividend into their total return, yes, then now they're up the most, 3.93. iSpy's the second at 2.65 for the month. That's pretty good. Think about that. 2.6 for a month. I mean, that's if you could do that for a total for a year, which you can't, but it'd be like 35% total return on a high yield fund. That'd be insane. That's what JEPQ got last year. JEPQ was like 36% total return on a high yield fund that paid a 11 or 12% dividend. That's insane. That's the record. That's kind of the gold standard. That's what people aim for. But I would say 10 and 20% would be more typical for these high yield funds. And that's still really good, when you consider all the upside you're leaving on the table by doing cover call strategies. Well, anyway, so JPY is doing well also. It's making a point and a half. That averages out to about 18% a year total return. But yeah, XDTE is killing it lately. All right, then THTA is bringing up the rear. But I mean, at one point it was down 11 points on the month. It's only down half. It's down half of that now. But you could see the light blue one. You could see XDTE. People love XDTE. Uh, it was down 3% that day, but then by that next day, the day after the market sold off, that freaking fund was up 1.5%. The reason is because it's uncapped at night, and I think that night it was up like 1.5. It made all that at night. So that's what XDTE is a specialist at. If you think it's going up overnight, XDTE is your fund because it monetizes that. Now, you leave a lot of yield on the table to make that bet. You leave about half the yield on the table. But if that's what you think, XDTE is your man, and there it is right there. So that the day between, oh no, that's the 14th, the 12th, the 6th. So it's right here. It's actually this day. Right here, that was the low, and then it opened up the next morning. The S&P closed at 51.80 and then opened up like at 52.30 or something. Well, that fund monetizes all of that because they don't sell their option until the market opens. So they, even though the market closed at 51.80, they sell their option at 52.50 the next morning when it opens. So they get credit for all those points in between, whereas Defiance sold the option the night before. Now the trade-off is Defiance gets twice as much yield. Defiance is going to pay a 60% dividend. This one's just going to pay 30. But the other side is this one monetizes these overnight moves. You heard me asking Jay about it yesterday. I asked Jay about it in New York. I've talked to Jay about it extensively. But anyway, he went over it again last night. So anyway, hopefully you guys saw that. If you didn't, take a look at that. All right, so what else do we have to look at? But yes, XDT is a badass fund. On this chart, it's the baddest ass fund. And the second baddest ass fund is S&P. On this chart, it's beating the freaking benchmark. So yes, that's incredible. But this might be one of the best months that XDT will ever have because it wasn't just that day. Now that you know how it works, they monetize overnight moves. There was a huge gap that night. Okay, there was a gigantic gap this night. And it's not like this is free money, but this is money they're making that Defiance isn't. That's all we're pointing out. Okay. Then on this night, the 12th, between the 12th and the 13th, there was a gigantic gap. And then this is the mother of all gaps between the 15th and the 16th. There's no telling how much freaking money they made on that day. But you can just see their returns going up here. These aren't the daily returns. This is a cumulative return. But you could see on the 15th, this thing was only up 66 bips. Well, by the 19th, it's up 63, but well, I don't know. I want to see now. I want to go check my math again. Anyway, but XDT is doing really well. All right, let's check out this. I'm using this to settle arguments. And I'm going from July 30th was the date I started on. And just to today, and we'll compare that to, I don't know, SPX. This is what I stayed up late doing last night. I made sure all of these tied. All right. 3-7. Oh, hang on. That's wrong. Oh, I didn't put the right day on here. 4.43% is what this is saying, but it's catching the days in there. Okay, so that is right. That is right. It was up 3.93 as of yesterday. I think what it was is I missed the dividend from last week in there. So then I just went back and I made it. Anyway, it's right. It's right as of right now, but I think it was actually going up more right in through here. It obviously was. But like I said, last night I just took what everything was really supposed to be up and made sure the totals tied to it. So in any event, all right. We'll keep an eye on this. I'll improve this report, but I really like these daily funds. I think that the daily funds are the key because they make more yield. If I'm trying to make more yield, not less, it's like I wouldn't want a bond that paid less interest. I mean, yield is basically like interest. So I want more, not less. Now, because these are based on stocks and these have, the way a strategy of a covered call works, these have drawbacks. You have to be aware that you can get funds that give you too much or give you the wrong kind or the wrong strategy, and it will create some other kind of unintended consequence that you didn't want to create. That is definitely a concern. All right, let's see what the market's doing. Let's see if it's still selling off. It's actually turned around a little bit. The 30-minute chart's trying to go green, and we're trying to put in a bottom here, or turn around here and maybe go up. Everything else is bullish. Let's look one more time at VIX. Even VIX, at least VIX isn't like going straight up or whatever. It's just kind of going sideways. All right, guys, I'm going to let you go. Hope you like the impromptu VIX lesson. I'll make a video that explains it better, a full video, because it's the kind of the theme of it is options aren't just for trading. That's one way you could use options to YOLO into earnings plays or whatever. But you could also use options as indicators of the market. You can look at option activity, i.e., volatility, and you can use it to model market behavior. And a lot of people do. There's been a lot of papers written on it. I didn't invent it, obviously, but I'm trying to, and I've read a lot of those papers, but there's some people that have had a lot of success using volatility to model the market and to help them allocate tactically. So I'm going to have more content on that, and I hope you guys like that kind of stuff. All right, guys, have a good day. I'll talk to you later.